Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. Okay, S&P 500 is a 15-minute chart, and what I kind of want to illustrate to everybody, and what I named this webcast is, it will go down, it will pull back when it pulls back. Everybody out there right now is looking for a pullback, and it's born out of probably missing the buying opportunity from last Sunday night, fighting price all the way up. You've got, you got the Greek thing going on. That is supposed to be negative, and it gets into a situation where the shorts are waiting for that next piece of news, and when that next piece of news doesn't come, in that vacuum, we grind higher, which is what we saw essentially all last week. Friday was a microcosm of that. 2113 was a very big area with respect to a potential floor. It also lined up nicely with with Friday's daily pivot. And what you see here on the 15-minute chart was an attempt to break below it at about 10:15. We did 1275. Then you saw another move. You saw a higher low here, grounded around a little bit, and then you saw the move up to make highs in the last hour or so of the market, which is very typical for a summer Friday. So I would just encourage everybody to see the market for what it is, which right now is a market that wants to grind higher at a minimum to retest where we are now, that 22 to 23 area. I talked about 23.5 last week. And you can see on the daily chart, here's the daily. You can see we're right back to the area now that I was talking about last week. We had resistance here. We had resistance here. And so we were right back into this area of resistance. So the issue now is whether or not we're going to be able to, we being the bulls, whether the bulls are going to be able to push over 22.23 and then establish 22.23 as the next floor. Currently, the floor is 13. Below that, you've got 1075 had shown a desire to be support. Then you've got the 2106, 2107 area that's always important. If the bulls can push above 22.23, then establish 22.23 as support, then their targets will be set on 21.34, and I really wouldn't suspect 21.34 to survive much longer than that. So what the bears need now is to have this layer of resistance, and it has been resistance all the way back into May. It needs to continue to be resistance. If it's able to do that, then the bears may be able to put a day together today. But for me, objective price is going to have to show me the way. Everybody comes in every day and assumes that today is the day that the market's going to go down. Why? Because we're up X number of days. Or if you predict every day that the market is going to pull back, then when the market does pull back and then everybody just kind of golf claps, I mean, that doesn't, that's not really productive. If 22.23 holds, if today's daily pivot at 17.5 breaks down, if the key 21.13 area from Thursday, Friday of last week breaks down, and those areas are beginning to be converted into resistance rather than being support, which is what they are now, then the bears have an opportunity to have their moment of time with the tape. Remains a two-sided market. Bears have their moments, bulls have their moments. It's just being on a little bit more of a sustained basis. We were at 22.23 back on June the 22nd. We did as low as 34.25 beginning of July, and now the bulls have had their moment after we had these huge range days 2 weeks ago. The bulls are having their time. The bears will have their time again, but don't get buried waiting for that time to start. Watch price, watch the support and resistance levels that are key, and let them guide you to where the market wants to be. All right, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Check out the chat room. I will be back tomorrow morning with another webcast. Trade them well, everybody.